Good morning. It is President's Day, February 19th, 2024. I'm not trading today as the markets have a shortened time frame, but I did want to go over something that helps me regarding trading. So this won't be a long video, and it's my first time back on here in quite a while. This is what I call my scorecard template, and I'll kind of go over how I use it briefly, and hopefully you can use it as a tool that will help you. So I've noticed a lot of traders, they'll show their entries and exits, and that's helpful and valuable, and I plan on doing the same thing. But more than anything, I want to focus on providing a good environment to trade. I think that so much of it is mental, and so I want to kind of delve into how we can establish the correct mental framework in order to accomplish our goals. As we look at charts on the screen, I mean, it appears that it's pretty simple trading, but it's also very difficult. So it's simple, but not easy. And I think that's because a lot of us fail to understand how important it is to have the correct mental framework, how important it is to not be emotional, how important it is to have a plan prior to executing your trades. So this has helped me quite a bit with that. This is something that I just came up with, and I'll show you how I handle it. So RTH refers to just regular trading hours. So sometimes I've got a great idea of what I want to do before the market even opens based on yesterday's price action. And other times I may not have a good idea of what I want to do until, I don't know, 60 minutes in, maybe an hour and a half in, maybe it's even 2.5 hours until I really get an idea and I start to form a hypothesis that deals with, ooh, this is the trade I'd like to take. So in this area, I'll just type in my main idea during RTH and what time that this occurred. So it might be that 9:17 on a Wednesday morning, I'd like to, get long at this certain price level. So I type that in. And I'd probably write in like where I'd be wrong as well. From there, I'm going to, this is once I'm done with the trade. I'll look at my accuracy report and I'll just simply look at, let me shrink this down a little bit. I made it a little large so you can see it easier. There we go. I'll look at the entry level. How close did I enter versus the level that I originally had mentioned? Because we've all been there, right? We're like, we want to get in, we want to get involved, but we don't do it at the price that we originally intended to, and then sure enough, price comes to our level and we think, oh, I should have waited, I should have been more patient. And the opposite happens as well. Trading is dynamic. So in these areas here, I would rate it between anywhere between a 0 and a 1. So let's say I did real well. I had my target. I'd like to get long at 49.80, and I did that. So I put a 1 there. Sizing. Was my sizing appropriate? Was I too small, too big, too large? If I was too small, I'd probably put like a 0.5. Stop placement. Was my stop at a structural level? For this one, let's say it was a 1. Forget this whole deal here. I was doing some copying. Profit target or stop hit. Now, so on this, even if my stop is hit, I'm still going to put a 1 there because I followed my process, right? I didn't adjust my stop. I didn't get all crazy. Now, if I needed to adjust it, a small amount, a small percentage of what I risk, that's okay. But if I start moving it and I start getting kind of willy-nilly with it, I'm going to give it a 0.5 or maybe even a 0. But on this, we'll just assume that I followed the process well and did it appropriately. And then I think I've kind of jumped the gun here, but I talk about, was I following the process well? And the process just referring to, did I know my target? Did I have kind of a rough time frame for the trade? Was this something where I was willing to give it, 20 minutes to play out? Did I initially think, yeah, I want to give this trade 20 minutes, and then I get out at 5 minutes because I'm, fearful that it's going to come back against me? Or is this something where I think, this should happen within 5 minutes. I should start seeing price move in my direction, and I should be out of this thing in no more than 7 minutes. So based on that, I would say, where was I at regarding following the process? We'll just say this is a 0.5 on this. So what I'll do then is tally these up and kind of give myself a grade. So in this instance, we'd have 1, 2, 3, 3.5, 4. So my grade would be 4 of 5. I guess it'd be a B, a low B. All right, now we'll look at our profit target accuracy report. Did I know my target? I mean, we've all been there, right? Where we've put a trade on and think, well, I'm going to get short right here. Well, why? And what's your target? Where are you wrong? Like if the trade goes against you, are you going to start averaging in and average this loser? Or do you know definitively where your stop needs to be? So on this, I want to always know my target. Secondly, did I allow price to hit my target? Did I have a plan and did I stick with it, or did I get out prematurely because I just couldn't hold on? I just couldn't be patient enough to let it hit the target that I had figured out initially. Did I adjust targets if the market warranted, right? So maybe I get in the trade and I'm thinking, all right, I want this trade. This should last anywhere from 15 to 30 minutes. But then I start to see that price doesn't do exactly what I think, or it kind of slows down, the momentum is lost, and it, might give me a reason to adjust my target. It might give me a reason to pull my stop in a little bit closer. It might give me a reason to widen my stop a bit. Again, trading is so dynamic. There are so many aspects to it, and it's always changing. So I need to do a good job of just following price action and trying to figure out, did I adjust target if the market warranted doing this? Was emotional capital reserved? So in trading, we talk a lot, almost exclusively about capital, right? Financial capital. But we have other capital as well. And part of the capital that we have is emotional capital. We've all been in a trade where we are expending way too much emotional capital. We've been in trades where we've moved our stop. We've adjusted our target. Where the trade plan, once we are in the trade and it's not going as we thought, we have totally deviated from our plan. And in those instances, I would venture to say that most times we are expending a lot of emotional or psychological capital. So I want to know when I'm placing my trade and I'm letting it try to play out, maybe I've got a time frame of 10 minutes on it or 15 minutes. Was emotional capital reserved? Am I letting the trade work for me, or am I just hanging on every little variation of price? Am I just a nervous wreck letting the trade try to work out? So on this, again, if emotional capital was reserved, if you're not freaking out, if you're not sweating it, I'd give it a 1. If you're, a little bit more concerned than you should be, finding yourself becoming a little anxious or nervous, probably do it at a 0.5. If you're just, biting your nails and it's like this trade has to work. This could be my last trade. That'd definitely be a 0 right there. So we'll assume you did a 1 on that. And then lastly, did I function from the soft zone? I'm going to be referring to a lot of books as I'm watching the market here. So one of which is a great book. It's called The Art of Learning, written by a man who was not only a world champion chess player, but then later in his life, he went on to become a world champion martial artist as well. And he wrote the book titled The Art of Learning. I think this guy knows a little bit about learning. And in it, he talks about functioning from the soft zone. Kind of meaning like, was I rigid, or did I allow the market to, did I understand that the market is filled with nuance, right? So as much as it is a science, it's also an art when we trade. And so in the book, just Josh talks about functioning from that soft zone, knowing that I can't be just extremely rigid all the time. Yes, maybe I've got a rigid stop. Maybe I have a rigid target. But sometimes the market's going to move in a way that I didn't anticipate. And when it does that, I want to be functioning from the soft zone. I want to be fluid. I don't want to be rigid. I want to kind of go with the flow. I want to act according to what the market's showing me. So let's say in this instance, this is my grade for this trade. We would tally it all up. We'd have 1, 2, 3, 4, 4.5. So I put 4.5 of 5 would get me an A. be it. So hopefully this is a tool that helps you guys out. I know it's helped me. And with my trades, I found that I'll make a bunch of copies of these and then just refer to it as the day goes along, as I'm looking for good trades and setups. So happy trading. I'll be back tomorrow morning. I'll be back around 9 a.m. Central Time. We will watch price action and make some trades if the market warrants. If not, we will just watch and observe well and try to develop some good hypotheses along the way and act in our own best interest. So hope you guys enjoy the day today. I'll talk to you soon.